Hey, good afternoon, and today we want to just talk to you a little bit about corn prices in here, and oftentimes, we bring things here that you probably, really don't want to hear. But on the other hand, we believe it's important that you do understand what's going on in the big picture, and what we want to attack here is insurance prices and what it is doing for you. Now, everyone knows, hey, that we had a spring insurance price at 591, and we heard a lot on this down move in the market. We don't need to get any price protection in place because that's what we have our insurance there for. And as we move into mid-October right now and halfway point on our fall insurance price getting set, so far it's sitting here at 490. And unless we get a lot of volatility here over the next 2 weeks, I mean, most likely, we're going to have our fall insurance price set in the 485 to 495 range. And all along, everyone says, hey, this is my floor, this is my floor. But you got to remember that once this insurance price is set, and let's just say it's set at 490 a bushel, okay, your floor is passed. If futures go from 490 down to 460 over the winter months, you have no more protection in place from your insurance. Your insurance protection is over with this false settlement of price and your yield. So what do? We've highlighted numerous times before on commercially stored grain. It's very difficult to make up the monthly storage costs and interest expense. Consider selling. If you want to own back, consider reownership at that time. For your on-farm stored grain, cash contracting, price protection, those are all things to consider. Now, it's not all doom and gloom in the corn market, as we have good export business. And as you look at this chart in front of us right now, we're comparing US versus Brazil. Okay, and all these prices are in US dollars. Well, if we go back to June 1st of this year, you can see that US corn is $1.40 a bushel of Brazil. Brazil was exporting a lot of corn, had a lot of sales. We get to July, US's premium to Brazil is still $1.13. In August, it's only 36 cents. And now, as of October 1st, US corn is a 7-cent discount to Brazil. And today, it's about a 20-cent bushel discount. That's why we are seeing this increase in export business. Now, if we want to look at corn prices compared to where they were a year ago, here's US corn was 684 a year ago. Today, 490, down $1.94 a bushel. The EU corn market has actually gone down more. China corn, though, is only down $1 a bushel, still sitting at 908. It makes economic sense for China to keep on importing corn. So if you have a bullish bias in here on corn in the near term, you've got to really look for strong exports because the U.S. is the game in town, as we are the world's cheapest. Wrapping things up in here today, I mean, everyone talks about seasonal lows being in place on corn. We're not going to disagree with that, but you got to keep in mind there is a strong seasonal for corn to work lower from late October through late November. That down move in corn, though, is typically 15-20 cents. If that's all that happens and we hold here, those lows from earlier in the fall are still going to hold. What we're concerned with right now is we're at a time of year where we struggle for news. Okay, we just don't have that market moving news out. We're still 3-4 weeks away from the next supply demand report. And the other thing that's happened recently, and we have a lot of news from the outside markets, whether if it's interest rates or we have the war with Israel and Gaza, the war in Ukraine and Russia continuing, but it isn't having as nearly as much influence on the grain markets as what we saw here a year ago. If we're going to look for a demand-led rally besides corn on the export front, look to bean oil. I think another thing we really need to keep in mind is this corn-bean ratio looking out to 2024. Looking at current prices right now, either Nov 24 beans are too cheap or D24 corn is a bit high. Again, and we don't want to set panic in here right now, but we got to be realistic, as you are going to be losing your price protection from insurance pretty soon. Once that floor price is set, and again, we're going to go with a 485 to 495 range. If the market drops below there, you have no more price protection in place. If you have questions on how to manage your risk, feel free to give us a call. Have a great day.